Before you start tackling those New Year's resolutions that, let's face it, start to lose their luster a little bit a few months in, I want to share with you the 5 lessons that I've learned in 2022 to help set you up for financial success in the new year. Let's get into it. Happy New Year and welcome to 2023. I am your host, Eric Persogna, CPA, Certified Financial Planner, here to help you increase your income, reduce your taxes, and invest smarter. It's starting to seem like, at least to me, that every year on New Year's, we are all wishing for the current year to end. In 2020, we had the COVID-19 outbreak, and I think by the end of that year, everyone was hoping and praying that 2021 would be much better. And it was a little bit. I think COVID was still lingering. We had the variants, and to top it all off, we had a lot of political unrest, particularly towards the end of that year. And I think that most people were anxious to have that year in the rear view and look forward to 2022. So let me just start real quick with the positives from last year. And there were a few, just focusing on some of the highlights. So number one, obviously COVID-19 is pretty much under control. At this point, I think it's more like the common cold than it is a global pandemic. So that's a good thing. We also have very low rates of unemployment, and we have strong wage growth. So 2 positive factors in our economy that I think are good for the majority of consumers and small business owners. Now, for the negatives that always seem to garner a little bit more of the attention. For one, we had the war in Ukraine, which unfortunately is still going on. We also had rising interest rates. We had rising inflation. We had falling asset prices, which you've probably seen when you open up your 401k statement. We had an Enron-sized Ponzi scheme with FTX that is still playing out, probably will for the next few years. And to top it all off, we have a pending economic recession to deal with in 2023. Now, as much as we would like to all forget about the past, focus on the future, I do think it's important that we reflect on what's happened so that we can better prepare for what's to come. And that's kind of what I want to do in this video today, is talk to you about the 5 lessons that I've learned in 2022 to help set you up for financial success in 2023. So let's get started. Number 1 is learn from your failures. Now, last year, pretty much every asset class failed to give investors the return that they needed to keep up with inflation. That goes for stocks as well as bonds. And personally, for me, I had my own fair share of failures, both in my business and in my personal life. But what I've learned from that over the years that really hit home in 2022 is that failure is by far and away the best learning tool. It's not always fun in the moment, but reframing failures as opportunities to learn and improve can be a very valuable asset. Just take the markets last year as an example. The S&P 500 and the Barclays Agg, 2 indices that I think pretty much every investor has some kind of exposure to, were down 18% and 13% respectively. Now, the failure here isn't necessarily that both lost money, but rather that one didn't do its job. And by that, I mean bonds. Bonds have traditionally acted as that buffer in your portfolio when markets are going down. Just looking back to the great financial crisis in 2008, when stocks were crashing 40%, bonds actually appreciated approximately 6%. 2022, however, that was not the case. And actually, bonds, for the most part, in some cases, performed even worse than different pockets of the stock market. Now, is that an epic failure, or is that an opportunity for us to learn? I personally think the latter. And one key takeaway here, one learning opportunity here, is that it really pays to understand what you're investing in, not just on the stock side, but also with your fixed income. Bonds are a very complex investment vehicle. Bond prices can move sharply when interest rates are changing like they did in 2022. And in my opinion, I think bonds require as much care, if not more care and attention than stocks do. And following up with that, I think another lesson to be learned from last year is to remember that old adage, don't fight the Fed. And in order to do that, I think we need to pay attention to what the Fed is doing, at least at a very high level. Now, going back, let's say to the beginning of 2022, for example, if you were trying to capture yield, at that time you had to go to long maturity or long duration bonds. And if you did that, you would have been, in a sense, fighting the Fed, because the Fed indicated that they are going to do whatever it takes to fight inflation, and that meant raising interest rates. And when interest rates go up, long-term maturities or long-term bonds, those prices get hit the hardest. Now is a great opportunity to review your investment strategy and be certain you understand exactly how you're invested in both equities and fixed income. And further, be cognizant, again, at a very high level of what the Fed is doing with their policies so that you can better grasp how, for example, changes in interest rates may affect the bond portion of your portfolio. Number 2, envy is the single largest destructor of wealth. In a 2022 interview, legendary investor Charlie Munger said, "The world isn't driven by greed, it's driven by envy." I couldn't agree more. Just think about all those newbie investors out there who were making millions and posting videos on TikTok about how much money they made trading crypto, trading NFTs, investing in virtual land, or your buddy that was buying call options and made millions of dollars investing in GameStop. With all that mania going on, I think it's easy to forget that there is no such thing as a free lunch, at least when it comes to investing. Envy makes people do things they normally wouldn't do with their money. Like, for example, investing their emergency savings into a crypto staking platform like Celsius because they heard their coworker was getting 18% on their money. Fast forward to today, Celsius and a lot of other crypto staking platforms like that have since filed for Chapter 11. It's not about wanting more money or high returns, but rather wanting what others have that we don't. Envy is a dangerous thing and quite possibly the single largest destructor of wealth. And it isn't easy to avoid, but the ones that do, like Munger, are grateful for what they have and they never feel the need to compare themselves or their investments to others. Their personal development is measured against who they were yesterday or the week before or the prior year, instead of their neighbor down the street who has the bigger boat. Remember this the next time you hear someone brag about how much money they made in this investment or that investment. Don't let their insecurities affect how you manage your finances. Eventually, the bubbles burst, the mania fades, and the charlatans quietly return to their 9-to-5s. Number 3, it is always different this time. There is no correlation between years' experience in something and proficiency in fortune telling. I see this all the time. Some so-called market expert comes on TV, has 40 years on Wall Street and says something like they've seen this story before, they know exactly what the Fed is going to do, what the economy is going to be like, and where the S&P is going to trade at over the next year because they have seen this before. They've been in Wall Street or on Wall Street for 40 years. The only thing that I know for sure is that this is not the way the world works, at least with finance and public markets. In fact, it is literally always different this time. Just think about it. Technology is constantly improving and evolving literally every single day. New business leaders are brought in to replace old ones. US presidents are elected every 4 years. Trends come and go. It is always changing. Take General Electric, for example. GE was one of the largest companies. Actually, it was the second largest company in the world back in the year 2000. Now, GE barely cracks the top 200. Just going back 10 years, communication services was one of the largest sectors in the S&P 500 and represented over 30% of that index. Now, it sits at about 12%. I've said this before, and I'll continue to say it, the only constant in life other than death and taxes is change. Now, don't get me wrong, history can be a useful tool to inform us about the past and help in framing our decision making. And personally for me, I use historical market data in my own business to gain a clearer perspective on where we are today and assess the probability of where we may be tomorrow. It's really all that we have. What historical data doesn't do is tell us precisely with 100% certainty what the future holds. You and your portfolio will be far better off accepting and embracing change, paying attention to past and present data, and always keeping an open mind. Number 4, you can't plan enough. There's really no such thing as over-planning when it comes to managing your wealth. I don't think anyone in the history of the world has ever said to themselves, geez, my finances are way too organized and I am overly prepared for any scenario in the market. No one said that, it's never happened. At its core, what planning really does is help you feel more confident in your ability to manage the unexpected. And even if you have a plan today, it may need to be revised. And let's just take last year as an example, going back to the beginning of the year before all the craziness happened in the market. Think about it. What was your plan if the stock market dropped 20%? What was your plan if bonds dropped 13%? And worse, what if both of those things happen and at the same time, the prices of everything absolutely skyrocketed? What was your plan? How were you going to adapt to those changes? Now, planning doesn't necessarily prevent all of those problems from happening, but what it does do is offer a peace of mind of knowing that you are well positioned to handle them should they arise. And if nothing else, I hope that 2022 illustrated the importance of being proactive with your investments and having some kind of plan in place. And if you don't have a financial plan, now is as good a time as ever to start building one. And if you don't know where to start, simply write down the 3 things that are keeping you up at night relating to your finances. Most often, at least in my experience, these are going to be things that are fears. They haven't happened yet in the world and the economy and the markets, but you are afraid that they may happen and that your finances are going to be in trouble. So write those things down, and then once you've identified those 3 things, determine what action steps that you need to take today to successfully navigate through those fears should they become a reality. Quick example. If you're afraid of not having enough retirement income to cover your lifestyle because the US may go into a recession, your plan may involve updating your investment strategy to be more dividend focused. And in doing that, that may require you to shift an allocation from US stocks over to international stocks, because international stocks can pay higher dividend yields than US stocks, which favor more share buybacks. And once you do all that, determine how much additional income that change would bring to your portfolio, and then further determine how much you may need to sell out of your investments to cover any shortfalls, let's say in retirement, if we do enter into a recession and if the market, let's say, drops another 20 or 30%. And if you need help, don't hesitate reaching out to a professional. Lastly, number 5, perspective is everything. Yes, I know your portfolio is down. Yes, eggs cost like triple what they used to be. Yes, a recession may be on the horizon. There are many reasons to complain about this or that, but rest assured, things are never as bad as they seem when taken into a broader perspective. If you rent or own a home in the US, be thankful that you have a roof over your head, unlike the poor families in Ukraine who have literally lost everything. If you lost money in the stock market this year or last year, be thankful that your life savings isn't tied up in FTX. And some of those investors are likely to get pennies on the dollar for what they put in. I want to briefly read a piece that I came across on Instagram from History Photographed that I think really hits this point home well on perspective. Imagine you were born in 1900. When you are 14, World War I starts and ends on your 18th birthday with 22 million people killed. Later in the year, a Spanish flu epidemic hits the planet and runs until you're 20. 50 million people die in those 2 years. When you're 29, the Great Depression begins. Unemployment hits 25%, global GDP drops 27%. That runs until you're age 33. The country nearly collapses along with the world economy. When you turn 39, World War II starts. When you're 41, the US is fully pulled into World War II. And between your 39th and 45th birthday, 75 million people perish in the war, and the Holocaust kills 6 million. At 52, the Korean War starts and 5 million people die. Approaching your 62nd birthday, you have the Cuban Missile Crisis, a tipping point in the Cold War. Life on our planet as we know it could have well ended. Thankfully, great leaders prevented that from happening. At 64, the Vietnam War begins and doesn't end for many years. 4 million people die in that conflict. As you turn 75, the Vietnam War finally ends. Think of everyone on the planet born in 1900. How do you survive all that? A kid in 1985 didn't think that their 85-year-old grandparent understood how hard school was. Yet those grandparents, and now great-grandparents, survived through everything that I just listed. Perspective is an amazing art. As we enter into 2023, let's try and keep things in perspective. In the history of the world, there has never been a storm that has lasted. This too shall pass. What were your big takeaways in 2022, and what do you plan on accomplishing with your finances this year? Shoot me an email at eric@oneupfinancial.com or share your comments below. I would love to hear from you. Thanks for tuning in and spending your valuable time with us today. If you have a topic or issue that's keeping you up at night, please let me know. Subscriber feedback is super important to us and helps in creating better content for you. If you haven't already, please subscribe to our blog at oneupfinancial.com/blog so you never miss a post. Thanks again, and we'll see you in the next one.